Hello and welcome to IB Times TV. I'm Leanna Brinder, business editor for the International Business Times. Joining me now is Guto Bebb. He's the MP for Aberconwy and the chairman of the APPG Group on interest rate hedging products. So hi, thanks for joining us today.
Pleasure.
Well, you have led the charge in terms of getting systems and redress in place for businesses that have been missold derivatives. So in terms of the latest developments in this scandal, can you talk to me a bit about what the banks have done over the past few days in terms of redress payments and consequential losses?
Well, yes, first of all, obviously, we decided to go for a second debate because we thought that the redress process was actually not delivering as quickly as it should. So we secured a second backbench business debate, which will be held later this morning. But upon the announcement of that debate, within a few days, HSBC actually announced that they were actually going to split the technical redress away from the consequential loss claims. Now, prior to that announcement, the aim of the redress scheme was to make a single compensation payments to businesses. And the concern that I had, and a lot of businesses had, was that by splitting the consequential losses away from the technical redress, you were actually giving the power to the banks rather than to the businesses, because a lot of businesses, desperate for a cash settlement, would actually not argue the consequential loss claim particularly hard because they wanted that compensation. So we've been arguing for the splitting of the redress scheme for a long time, and I'm delighted that securing this debate seems to have persuaded the banks to change track. HSBC haven't made their announcement. Some of the other banks have followed, and we'll see whether the FCA now manages to get all 11 banks on side.
Well, on that point, I mean, it's fantastic for the customers of HSBC and RBS, who have done this blanket for all customers to be paid redress before consequential losses are calculated. However, Lloyds and Barclays haven't seemed to be moving in the same line as them. Why do you think that is?
Well, I think this is a real concern, because the FCA argue that the reason why it's taken so long to get this scheme going is because we need to have a consistency across all banks. Now, with HSBC and RBS making their announcements, the FCA now have an obligation, in my view, to ensure that the other banks follow suit, because it would be completely wrong for somebody missold a product by Barclays, for example, to have a single payment and therefore wait for the payments to be made until the consequential loss claim has been calculated, whereas somebody from HSBC would be able to get the technical redress immediately whilst then working out the details of the consequential loss claim. So the FCA needs to bang some heads together here. They've always argued that they need to have a consistent scheme. That argument has actually cost us months of wrangling between the banks. On this issue, I think the FCA needs to have a resolution within the banks very quickly indeed.
Well, in terms of the review, there's been a different speed for each of the banks in terms of showing customers being offered redress. Yes, they may have not paid it out at the moment, but some seem to be working quicker than others. What is the government and you trying to do to try and speed this along altogether? Well,
I think that's a fair comment. Some of the banks have actually clearly been moving at a faster pace than others, and I wouldn't want to name names, but certainly they know who they are, whereas some of the banks have been clearly behind the curve. The other issue is that obviously we found out as the redress process has gone forward that some of the banks have actually significantly more businesses involved than others, and yet they have the same number of staff. So for example, RBS, which have something like 52% of the cohort of businesses involved, have roughly the same number of staff working on the issue as Barclays do. So yes, there is a need to look at that very carefully, and from the RBS point of view, I think there is an obligation on governments to look very carefully as to whether the resource required to sort out this scandal is actually being put in place by what still is a largely taxpayer-owned bank.
And in terms of the amount of customers that actually were allegedly missold these products in 2006, 7 and 8, what is that signalling in terms of their legal rights at the moment? Well,
I think this is a key point which I will want to highlight in the debate today. Yes, the redress scheme is in place, and the aim of the APPG is not to redesign the redress scheme, it's actually to improve it and make sure that it works for small businesses. But I think it is important to point out that roughly a third of businesses going into the redress scheme are actually being excluded from any redress because they are deemed to be sophisticated. Now, we're not happy with that sophistication test, but I think it is imperative that businesses who feel that they might be protected by the fact that they qualify for this scheme, it is important that those businesses still protect their legal rights to take action against the banks if, for example, they're excluded because they are deemed to be sophisticated. Because if they have spent 6-7 months in this process and then they are rejected because they are deemed to be sophisticated, it is imperative that they have retained their ability to take legal action if necessary.
Okay, and with the backbench debate today, that won't be the end to all problems, but it's obviously going to be a great opportunity to highlight concerns you and the rest of the APG have for people who've been missold derivatives. So can you outline some of the other concerns that you're looking to bring up and discuss today?
Well, clearly, in addition to the fact that we think that the scheme needs to speed up dramatically, we will be highlighting the sophistication test. We'll be looking very carefully at the fact that there's no appeals process within the system. We think that's a mistake. We need to look very carefully at the ongoing banking facilities. There are some concerns that the banks, once they've actually paid out the redress, will no longer want to have a relationship. The banks deny that, but we need some certainty on that issue. And then a key issue that we will be highlighting is the hidden swaps or the embedded swaps. Currently excluded from the redress scheme, we feel that they should actually be looked at again. You know, they are basically a hedging product hidden within a loan. We think they should be included within the redress scheme.
Well, you've had some success for really championing even tailored business loans to be looked at as well. So this looks like a really good step forward in terms of hidden swaps. You obviously are able to speak to the regulator and the British Bankers Association. What has been their attitude or their understanding of how important it is to look at these as well?
Well, I think in terms of the money that they've spent on the scheme, obviously they're spending a huge amount of money, but then we're not getting any results. So they seem to be saying with one hand that they are taking it seriously and investing a significant sum in the staff that they have working on the scheme. But the proof of the pudding is actually in the redress being offered to small businesses, and that's not coming through. So we're still wanting to maintain that pressure. In terms of the issue of hidden swaps or embedded swaps, we're not actually getting much traction from the banking sector. They are hiding behind the fact that the FCA are saying that this product is unregulated, therefore not part of the redress scheme. And therefore one of the issues that we will be highlighting today is that if the FCA says it's not our responsibility, then we will be asking the Treasury to look again as to whether their definition of what is actually a hidden swap and therefore unregulated, whether that definition is fair to the small businesses affected.
Okay, well, good luck today and thank you very much for your time.
It's a pleasure, thank you very much.
And that was Guto Bebb. He's the MP for Aberconwy and the chairman of the APPG Group.